Is it showed up or is it ended? I can't get to my own broadcast. I still haven't figured out Twitter really on going live. Yeah, I don't know why that happened. Stupid. I wonder how I can send it. I followed the same procedure I did last time for some reason. It's on? Give me the link. Go in the URL and give me the link, please, and thank you. I may have given you the wrong link. Tecnologia. Tecnologia. Eh! Tecnologia. That sounds like me and my friends when we were 15 and 18. Can you send it here? I can't use it on my phone. Can you post it here? I mean, I could. Let me check. I got it. Let's see if it works. Oh, the wrong one. Okay, it works. It's on. Thank you. Try this, guys and girls. Let me know that this link works. I'll tweet it. Okay. We have 6 million and a half views already. Excellent. No, we don't. It's more like 500,000. Also, no. 73. 73. I'll take it. All right. Welcome if you're watching from abroad. If you're in here, please support the channel and go to Twitter. Spend some time there. You don't even need to be there. You can stay here. Just open a window somewhere over there. The comment section should be open. I did not restrict it this time. Last time I did restrict it. Let's see what happens when you don't. They're probably trolls, haters, bots. Be careful what you click on. What we're doing today is we're trading. We acknowledge the upside targets and breakout in progress above 642.60, but we also have a blindside scenario that could come to fruition that pays a lot for the bears. So this played out to a large degree. So I will put a check mark here. That played out. Available. Okay. So if we go up there, you can repeat it. Or now you say this one might be available. Surprise. Available. Yeah, I know how to spell. So I'll change the color. The green arrow is not easy, nor is it obvious. That's surprise part one. Now, options data says we have downside pressure from 644, and it's not huge. If we call it 90, the upside pressure from 642 is 240. So quite a bit more bullish posture from the options transactions this morning. Boeing looking to break out, GE looking to break out. I mentioned those two because that whole sector, the industrials, were super weak yesterday, started the day very weak, and now are showing breakout potential. I caution you with that. Okay. They have a lot of failures. For example, for Boeing, I would need to see it go to 234.6 before I trust it. It's at 232.6. The low of the day is 226. That's amazing. The elasticity is amazing. That's one thing we're watching. And another thing we're watching is the discrepancy between the VIX value, which is still above yesterday, just barely covered the gap from overnight. And the VIX futures blew past the support from yesterday. Those two are not in sync. So I said earlier, we're either below 641.4 today or above 644 in the next 30 minutes, maybe. I said that about 10 minutes ago. So, soon, within the hour. I don't think we stay here too long. Okay, so if you bought a put again at the top end of the arrow, you have the opportunity to harvest the same kind of. I bet you that was 15 to 18, maybe 22% the first time, and about the same the second time. It's okay to scalp $15 per contract here and there, 20, 25, when the price action is this choppy. It is choppy. They're trying to find a trend. And I'm going to repeat what I said earlier. The trend is down. What? Yes. Yesterday, it started to be down. If you look at my screen, I said it earlier. I'm going to say it again for the benefit of Twitter. So we were all afternoon rallies yielded lower lows, rally, lower low, and the low overnight was much lower than this. That's the X factor today. And here's another rally. What if this rally also yields a lower low? Whoo, that would be a blindside that nobody sees coming. That's why it's worth holding the put that we're talking about. Okay. I think 642.3 and 642.2 and 642.1 are legit targets right now. So that green triangle, the top end of it, no. This red squiggly is doable, which I drew a bit earlier. It's kind of coming into fruition, but they're stopping halfway and they're not finishing it. So I'm going to take that check mark out. Also, you see below 642.40, there's not a lot of volume in the today so far. So the bulls want to hold that advantage. Look at how quiet upper right-hand corner. Those are the mega caps. They had a moment this morning. They rebounded hard, and now they're consolidating sideways. What's going on? Who's ready to bust out or export or give it up? NVIDIA, super bullish posture. So if they take out 182, which is a tick higher than the highs of yesterday, they can hit 185, 184.7. Apple, completely different ballgame. They bounced only to recover the neckline from which they fell. Alphabet, Microsoft, nowhere near that. It's even worse. Meta, somewhere in the middle. Amazon, somewhere in the middle. Meta, Amazon look like each other. Same. AVGO looking more like NVIDIA, which makes sense. We have a story of haves and have-nots. It's an incredible market. I love it. Where are the comments here? Messages. No chats, no comments. The chat is not restricted. All right, we're waiting. The put is still playing out. Like if you bought it, it's paying you back. It's okay to exit here. But if you won a couple of times today, calls and puts, maybe 3 times you had the opportunity. If you're winning with your Iron Condor, you can let one ride. It's okay to miss out on profits on one trade if the outcome is going to be fantastic. Now, it is not obvious to get the green arrow. But if we do, A, it's going to pay a lot. And B, it might pay double a lot if they lose the low of day. One more time about the low of day. Now we're taking ourselves 3 steps forward. This is the low of day. TradingView does not show. Overnight, the SPY fell to 640.2 or something. The QQQ fell to 567.5. Anybody remember the number 567.5? 567.5, 641. Those two numbers were pivotal just a few days ago. But for some reason, TradingView does not show them. How many people are on TradingView blind to the fact that overnight lows were 640.2 and 567? Maybe enough that we don't go there. Or we do. So if I have a put and it's greenish and it's my third win today or one of 4 winning trades today, if the Iron Condor is still working, then it's okay to stay in it. If you're holding a call for a 646 scenario, it's okay. They're both viable trades. I scientifically can see a reason to go to 642.10. I can't see a reason to go to 646 except to say they broke out from a neckline and they're trying to establish it. I guess I'm giving an advantage to the fact that there are so many ledges that we lost yesterday. This area of 644, if you remember that green line, look left, upper left-hand corner of my screen. Remember that? Where we were waiting for it and it finally came down. We waited like all freaking afternoon. So if they fought to defend it so harshly, how easy is it that they're going to take it out? The answer is you need to watch NVIDIA. So down here, I'm trying to reacquaint myself with PNF charts. To be honest, I'm just trying to hopefully learn something, pick up something before I do my homework on it. I vaguely did homework on it, and I forgot what it said. Let me review. I know that the chart ignores volume and time. So we alternate X's and O's based on reversals. And you choose the setting on that. A new column starts only when price reverses by the reversal amount. That's the confusing part. So let's see the reversal amount. 3. 3 what? 642.6. 642. Drum roll. Can you hold the drum roll for about 10 minutes? That's what it's going to take. So meanwhile, we have a tightening range. The tightening range is lower highs and higher lows coming into a pinpoint, and there's going to be an explosion from it. So this available arrow has played out twice already to a degree, and we're seeing if we're going to give the surprise available one, or will we go to this area right there. I would start booking calls. If you bought a call here for this opportunity, you're not crazy. That's what's going on. AlgoFlow is not super bullish. In fact, it's red. Take it with a grain of salt. The Traditix information is viable, but I give my theory a little bit of extra weight because I watch charts all day and every day, and that looks like the easier path to me and the more blind side. This also is a head and shoulders that would target my targeted area. The head and shoulders is not a reason to buy a put. It just tells you if we finish the red arrow, we have the opportunity to trigger that head and shoulders, and then the target would be 642.2. Wolf Wave says 642.2. That's why I'm going with. You scalp some puts and calls here and there, not made a lot, but still okay. Well, Raul, the goal is to establish a repeatable winning strategy, right? So if you decide to quit working and doing this full time, do you have a process that you can repeat? That's what you're trying to answer. So if you use one contract to practice, so you buy a call, you buy a put. Thank God for the VIX being so low. Buying a call means spending $90. Buying a put, maybe $110. Not usually, when we had a little issue and the VIX went to 18, now those prices be $300 to buy one. So this is where you practice the habit of, okay, how fast am I opening an order and closing an order and not making mistakes? Do it with one contract. Once you establish that, then you dial it up 2, 3, 4, and then you hit your scale where the mental game kicks up a notch. You're okay watching a 30% dip on 3 contracts, a drawdown. You won't have the same feelings when you're using 20 contracts. You understand? So do it with one in up markets, down markets, sideways markets, low VIX markets, high VIX markets. Then you can quit your job. Yeah. Have I said today that AI is a dumbass? AI is a dumbass. Let's go. Do it. All right. So now we have a resistance line at 642.9-ish. All right. Are you seeing what's happening? You remember this one that I drew like half an hour ago? That's what happened. The market went up, caught breakout chasers, gave them a second look at it. Now it's taking their money. If somebody bought a call here, which I told you not to, in fact, I told you lock profits as we pop. They're stopped out here. If not, they're down 40%. If somebody bought a call here on the down, on the dip, they're not stopped out. They're barely red, if at all. That's why you don't chase the breakout. You let it happen, and you buy the call to chase it on the way down. Again, if you chased it, you got locked in. So this was resistance earlier today. Now it's support. I'll move it over to here. This was pivotal. I'm going to use it as resistance up here. So now we have this range we're ping-ponging inside. The question is, if you bought the original put and never locked your profits here, 50%, 60%, whatever it was, you're only down 25, 27%, still a viable trade this early in the day. If you bought it, if you locked in your profits and rebought the put, you're barely down. Also still viable. If you're holding a call on your thesis, still viable. My thesis is not obvious, but now has backup from this head and shoulders. If you don't see where the head and shoulders is, I'll draw it just for visual purposes. Okay, so how does this play out? I'm going to leave it that way. They want to recover this dotted blue line ASAP. So they want to get to my green line up here, 642.9-ish. Otherwise, they establish. I don't know what just happened here. What the hell is this? That's cool, but I don't know what that is. How did this get here? That was like weird. I don't know how I got this up here. Anyway, so this is what they need to do in order to avoid the target of that. I don't need to draw the target. It's somewhere around 642, which has been our thesis, that we break down to 642, 10, 20, something like that. So our thesis has a visual representation to it now. Get it? All right, so I'm going to delete that. It's too much noise. We don't need it. We can see it. It does the green, expect to bounce further. If we get the green one, then we become in holy crap, we need to hold the low of the day scenario. I would lock the put, but I would leave a runner if I have it in me. If you have a big account, the way to do it is to buy a put, go much lower, sell more stuff to finance that put. That's why you see these crazy options trades throughout the day. Okay, speaking of options, let's put the mojo in here. 644, the pressure at 644 up there is growing, still not massive. The pressure at 643 is small, but it's there. So I'm going to move this down to here. The pressure from below at 642 is still here, same level, and has shrunken 30%. So still there and still respectable. What does that tell me? Nothing yet, because we don't have a trend day. We're chopping inside of a range, which is awesome. So now the opening range is established. And we have sold one lower high, and one lower low. Can we do another one? If we do another one, we basically finish the red path. It's not going to be easy. Look left. That drop here was on an extreme fall from these guys here. Well, that's not obvious that it can happen again, especially when NVIDIA is threatening a breakout. It's the mother of all stocks, you remember? Yeah. These guys are all the ETFs. Let's zoom out and take a little bit of stock here. Okay, so these guys could lose their support and accelerate to the downside. So these are all the ETFs, which are about 30% of this stuff here. What's going on Twitter? Anybody asking questions? Target. You hear me, right? Target on what? The disclaimer here is that someone on YouTube, I don't know if they're kidding or not, they said they have all their savings. Is that what I'm understanding inside one trade? Yeah. Things never to do. And I take no responsibility for any comments I make that may result in profits or losses with somebody that takes risks like that. I'm only sharing my opinions of this chart that's unfolding in front of me. My idea is if I don't know what I'm doing, I better do a paper trade. Very easy. You open your account. Thinkorswim offers paper trading. Schwab, they all offer paper trading accounts. Even TradingView offers a paper trading account. I would not use real money if I'm making decisions like that. A 642 put. I think they're kidding. No one would do that. No one should do that. Okay. The target of 642.1 is measurable from a wolf wave perspective. You're not kidding? Okay. Good luck and cross your fingers. That is outrageous. That is outrageous. That is nothing I would ever do. The rules of engagements is you need to be able to survive your maximum loss. You put all your savings in, you don't survive your maximum loss. You're wrong, you're out of the game forever. Nothing I would ever consider doing for even a fraction of a second. Yeah, well, that is not. I'm not gonna help you do that. Yeah, I take no part in that game. I wish you all the luck, my friend, but this is outrageous behavior. Yeah, no. Listen, in this environment, a tweet can make you or break you. So go to Vegas. This is Vegas time. Okay. You see here, it says surprise available, meaning it's not a given. The bullish sentiment reigns supreme. This is where they want to go. Taking a downside bet with a small money to make a decent return is one thing. Laying down all your money on that bet is something that I would never do. Yeah. Okay. 642.8 through 642.9 is an area of difficulty for today's chart. Reminder, this is a 30-second chart. So every candle looks like a mountain, but it isn't. If you zoom out, you will see a completely different visual. Let's do that. Middle right-hand page. That's what the S&P looks like right now on the 5-minute basis. We have a bearish harmonic. Target 1 was met. Half of target 2 was met. Look at that. Target 2 is 642.10. What? Like, I love it when the coincidences like that. But if you break out from 643.4, the upside target becomes 644.5, 645, and maybe even more. I wouldn't buy a call for it because of all the resistance that we have just above here for today. And if you look left from yesterday, also, if you zoom out long enough, yesterday, the end of the day was very red. This candle came on the back of, I believe NVIDIA had a moment, but maybe it was system wide. And they're just trying to erase it. So taking it out exhibits a lot of fortitude. So it will carry forward. But taking it out should be very difficult, especially when you have backup failing zones as well. And look how pivotal it's been. It was support, terribly lost, overnight failed, this morning failed. They can try again. And also, the weird thing is that the lows of the overnight are not here. They are down here. Thinkorswim shows them. This platform does not. Honestly, don't know how to explain that. I pay for all the data feeds in here. And I still can't. I thought it was that. And I went ahead and paid for all the data feeds, and I still cannot get a decent overnight quote. Selling a credit put spread on SDZ. It's filled at 83, huh? That is a lot of premium. Make sure there's no earnings, and you're asking for a big reward on that SDZ credit put spread. If you're watching this on social media, take responsibility of the risk you're engaging with. First rules of engagement: you have to survive whatever trade you have unscathed. Like, I shouldn't even feel it tomorrow if I lost all of my trade today. I should wake up and say, it was a bad day yesterday. And that's it. And move on. I shouldn't be nauseous. I shouldn't be worried about it. That's how it is in my book. And most every other person I know. All right. If you're watching on Twitter, thanks. That's a new thing. Sorry, I messed up the start. They don't have a lot of good help on Twitter. For 4 days, I've had a request for support to come at me saying, yeah, we know about the issue. They don't say when, if they're going to work on it or anything. That was their answer. I had a paragraph after paragraph explaining my problem, which I still have. And their response was one line: we know about the issue, try again later. Nobody's behind the wheel. And the robot says, I can't answer you anymore because I forwarded it to a human. The human failed to reach out. Okay, let's put back the lines. Okay, this available played out completely. Okay, twice. Look, completely. So we can delete it. So not to confuse anyone. The support, the circle, the green circle, is now proven support. It was potential resistance. And the top line should be resistance from this morning's price action. I don't have any open candles above that. So you know how I say fair value gaps? There's nothing open. We are on 30-second charts, and I don't see one open other than the green line, okay? So going past 642.9 serves no purpose except for an attempt to break out. Soldiers in that fight. We have these guys. Am I matched up? These are 30 seconds. And these are 5 minutes. I show 5 minutes. Oh, no, I went back to 30 seconds. Okay. So these guys have a lot of work to do. These guys don't have a lot of work to do because they have one or two soldiers looking to explode. What just happened to crude oil? Yesterday, crude oil was going to the moon, and Clymer said, short it. If you did, you're making a bundle. He came in here and he said short every spike, which is what I've been saying, but he said it yesterday while it was exploding higher. If you did that, you made money. Don't overstay your welcome. You never know who says what about crude. very manipulated from rhetoric. Okay. You remember that Head and Shoulders we mentioned? Well, they're in the process of recovering the neckline. If you want a line, again, the Head and Shoulders is not a study, it's a measuring tool. Okay. The measuring tool says if they confirm it, the downside is the same target I mentioned a bit ago. Okay. So something around 642.10-ish, which is a target from a harmonic and a target from a wolf wave, which is what I saw first. I don't buy a put because there is a Head and Shoulders. I buy a put because the Head and Shoulders has triggered. So if they stay above the purple line, the Head and Shoulders did not trigger. Okay. And as far as reasons to go down, let's see if they hold this last dip. They made a lower low. They made a higher high. So one could say the wedge is broadening or trying to broaden. Some of you are buying puts and calls and not reporting it to me. That's fine. Just if you're finding success in the live room, folks, my team, share it. Like I mentioned to Royston this morning, he's finding success. He's fairly new and he's finding success. So share it. Because if you have good instincts, other people may be able to benefit. That's the point of trading together. It's not because we're all geniuses, because combined, we can be a formidable force. Okay, so me putting the arrow down shouldn't make you buy a put. I'm giving you a visual of the potential, which I expressed earlier, which we've gotten half of it. Twice, the red arrow, I deleted it. I'm going to delete this purple line so that I don't get somebody else put their entire life saving in it. If the bulls lose 642.50, they're probably going to test 642.30. If they lose 642.30, they might finish my red path and therefore continue the path lower to the lower target. They can reverse all of that by just making a higher high, a significant higher high. Start with 643. Soldier in that fight, not the energy sector, XLE. Not the XLV, not yet. The XLC also strangely is low. I forgot who that is, Meta. The XLI, careful. The XLI may cause people to go, what the F just happened this week? Mark my words on the XLI. It could be at 149.5. Long shot hunt of point D, which I don't like very well. But given how volatile they have been, GE, Caterpillar, and like, if you have longs, you have a lot of sellers from Friday's spike, and you have a lot of hot air to fill on the bottom. At some point, the White House will run out of stories, and the market will become inured to the same ones. I think the price action is just going to play out however it is. Just use common sense. Read the morning note and use common sense. We are ping-ponging. The bulls have an advantage, and they have a huge blind side. So if you want to short the blind side, you can make a fortune into the end of the year, but you have to do it with extreme strong knowledge of options, which brings me to the first selling point. Join us in October. We will have a 2-day seminar in person in Los Angeles. Actually, it's not in Los Angeles. It's right off the airport of Los Angeles, which is not in Los Angeles. Thank God for that. It's very easy. You get off of LAX, 7 minutes, you'll be at the hotel. You don't even need to leave. If you want to go explore, go northeast. 10-minute car ride to Santa Monica. Beautiful. I promise you this. You go to Santa Monica, walk up to any oceanfront street, sit on a bench, you will see a pod of dolphins come by. Just right there, along the shore. Last time I went, I got there, But I hadn't even sat down yet. Whoop, 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 whoop. These short dolphins, whatever they're called. Like 40, 50 of them. Okay, 642.7 should present some resistance. Let's see if they respect it. Look at how thin these candles are. That means there's no volume. Best to call the hotel for rates. We have special rates negotiated, so use our code. Log into the website on Simple Stocks. There's a link right there. You click it, it should take you to the booking. The rates are reasonable at that hotel, really reasonable. Los Angeles area has a little bit of everything. It's huge, huge. The county is so spread out. All right, look at the top right-hand corner of my screen. Who's the party pooper? Which mega cap? These are all the mega caps on one chart. 7 of them, not all. The 7 largest companies. That's NVIDIA, Microsoft, Apple, Alphabet, Meta, Amazon, and AVGO. So let's see who is actually doing this. This is the same group individually. This 3-minute candle. Amazon coming off the highs. Here I have Tesla and Netflix combined on the bottom right. Alphabet is off the highs and lagging. So if Alphabet loses to 05.8, it opens a trap door for another $1.50. NVIDIA still at the upper ends. Okay, Microsoft. Microsoft is the one with the biggest dip here. So that's the drag right there and holding on the dear life. So let's watch Microsoft closely here. What is it going to do here? This here is an inverse cup and handle. We cutely call this a ladybug. If they lose, this is like a head and shoulders. Then they drop. So we might see further weakness from the mega caps if they don't bounce. But seeing that Microsoft is the culprit, it doesn't necessarily have to drag everybody down, right? So let's see if it brings somebody else with it to help it to the downside. Maybe Amazon or Alphabet. I'm in a few 642 puts, 49 cents hedge of my accounts. All right, Dave. Hey, good to see you, man. People on Twitter. Thanks, Jack. What you guys don't see that are watching on Twitter or YouTube is that we have 160 plus people, or therefore thereabouts. It's 420 people that log in and out every day, all day. That's really, but at the same time, what's going on is, I'll cover your email, Dave. Sorry about that. So we have 157 people here, and you can comment. So the group is trading live. So if you see like 20 or 30 people watching, we trade like this all day, probably 10 hours a day. Well, we hang out 10 hours a day. We trade all day. We also do earnings. We stay after hours for the earnings. I still am trying to understand the PNF charts. I'm really interested to rekindle my... This is the S&P and PNF charts to see if I can... I want an edge. I do have an edge with regards to trend, bulletproof. I developed it a couple weeks ago, 3 weeks ago. It's been bulletproof. I need an edge of confirmation of level breakdowns. I think that's where the PNF will bring me. What PNF will bring me, like a solid consolidation zone. So that's what I need the PNF charts for, maybe. So I'll watch him for a couple of weeks and see if I'll incorporate him into our game plan. Now, there's been a change. 643 pressure is now pretty sizable, 160 with 150 back up at 644. This pressure here is still at 642, but it's only 130. So we have 130, 160, 130. So the advantage is to the bears. If you don't know what I'm talking about, if we are seeing a trend develop, it's probably to the downside. This information changes minute to minute, so I'll keep us updated. Unfortunately, there's no way for me to dynamically bring it here. I tried. It is still a work in progress, and it looks like this. Hopefully, it shows up. Nope, not showing up. Okay. This should contain these values I'm regurgitating, but it hasn't worked yet. Hopefully in the future, I can make it work. There is data inside this platform, but the data has not proven itself reliable. We did notice that when the number is high, although it's wrong, that's a magnet. So red is magnet, yellow, smaller magnet, green should be a repellent. So it says what I'm saying. It's easier to drift lower. So it did flash 642 high red, right? Not reliable enough to make money off of or risk money on. But that's the concept. Hopefully in the next few weeks, I will be able to do that. That would be amazing. Wow. Can you imagine? Ooh-wee. Okay, update on the Iron Condor. That Iron Condor paid 2/3 of its value already, the original one. The one I gave to Maria is also up 30% of maximum gains. The credit call spread is $50 profitable per contract. The credit put spread is about the same value, maybe $5 red. So all in all, if somebody took it, they can book $45 out of thin air. And the risk was 370. That's a legit percentage reward. They're not giving it up easily. Look at the rebound here. God, what in the world is happening? So that is, I think, AVGO. Let's go check. Apple is picking up steam here. Good work, but AVGO is here. It's not it. Okay, let's go to 30 seconds so we can match up the time frames. Looks like Apple. And Meta. You see the effort? There are too many soldiers, too many good soldiers for the bulls. And that is a bullish flag, but not if you look left. For today, from the low to here is a bullish flag. Same here, but okay. I mean, they have the potential. Okay. Woo. Okay, so clearly that doesn't work. Give me the traditional settings. I'm not good enough to use the ATR setup on this PNF. I'm going to go to the traditional settings and see if I can baby steps learn it. Okay, so this here is a bullish setup. It says that we can come up to this level. I'm not sharing numbers because that's 8 ETFs in one chart, 945. But it says we must hold the low of the day and not fall more than this much. So yeah, it is bullish. They're taking their time. But there are some weak spots in the ETFs and they're harder to move. These 7 stocks, they're easier to move, as evidenced by how flexible they are. That's some crazy price action here. That's funny. So if you're watching on Twitter or YouTube, you can ask questions on slower trade setups, any ticker. Since we hang out all day, we discuss a whole bunch of stuff. We are in middle of the range for the last, 40 minutes. They're deciding. I'll deal with it later. This guy doesn't know anything. AI doesn't know crap. Okay, I was hoping I'd get help from him. No help. So we will forget him. Are we choppy because of NVIDIA's earnings? No, not necessarily. We're choppy because we are dependent on headlines. Like, for example, yesterday, after hours, we dipped, right? But mysteriously, all afternoon, we were drifting lower. Here's a thesis. Somebody already knew about it, and the circle is pretty wide these days. A lot of business people involved in government affairs. Am I right? Now more than ever, at least on the obvious. So people in the know were drifting us lower all day. And then after hours, whew, the trap door was large. 40 points, I think we fell. 64.30 SPES low. By the way, yesterday's highs and lows, we nailed within $1 from the morning right up. The ES top was within pennies, and the ES bottom was within pennies. So dollars in combined. And now we're bouncing off of it, awaiting the next headline, and people will have the jump start on us. They won't have the jump start on NVIDIA's earnings because that's a business thing, and whoever was already in the know will still be in the know. Nothing will be different this time. But news out of the White House this time is probably reaching more ears than ever before. And that's a thesis of mine. It's not bad, it's not good, it's just an observation. Let's just say there are more golf games around it. And it's not that crazy of a thesis. It would explain the small drift in the afternoon, the sharp close at the end, and then the sharper dip after hours on the said headline that came from the White House. I'm told that they fired one of the Fed heads, the lady that was already in trouble. So, anyway, back to the show. This is what we are looking to see. The Bulls are trying to recapture that to avoid its consequences, which is half of this green arrow. Meta is chopping in a narrow range. Plan to close the credit put spread and credit calls for tomorrow. Don't want drama. If you're even now, you might want to avoid the drama and close today. If you are even in a trade that has caused us problems, and I know we've worked with that in the last few days, I would exit. IWM is the same way, flagging. Okay, that's an amateurish way of looking at it because if you're flagging, you're completely ignoring the prior behavior. So let's put a visual to what I just said. Upper right-hand corner, go to a 5-minute chart. So yeah, that looks like a flag today. And then you look left and you have all of this. So you might get to 235 and then you have to deal with all of this, which is serious old resistance. But it's no longer old anymore. It's here yesterday or the day before yesterday, Friday. It's not that old. And Friday's burst was as big a catalyst as you can get. The Fed basically emergency shifted course in a non-Fed event. That was a pretty bullish statement. So what is going to bring us above that? That's the thought process. Already this burst is ridiculously strong. And it's not the mega caps, it's these guys. The ETFs. So probably the XLF, it's hitting against the highs of itself today. And let's see if we can find another culprit helping right now. XHB, not that they're that big. XLE, energy is bouncing. Weird. XLE is mostly Exxon Chevron. XLF and XLV, that's the only two that I see that are that frisky. Let's go check. These are the ETFs, 5 minutes. Let's go to 1 minute. You can see top left, XLF, second, XLV. Literally off the Lily. Lily is one of them, yeah. There we go. XLV gone. So the XLV is probably 8% of the S&P. So it's a legit help. Taking some money from the industrials, which I said the industrials could have a disaster coming. XLF strong, but it has today's highs also. So careful. I wouldn't start longs here because that's what they've been failing all day. I would not. And the chop now is you can't make money off of this. There's no money to be made. And these guys need to do a lot more follow through. This is an interesting spot. This is as strong of a setup as the bulls have had in a while. And this 644, the 643 is pretty much but gobbled up. 644 pressure is there. It's 120 and it's 216 at 642. So the 642 just grew a little bit in size. This one retreated and shrunk. So the range is still equidistant. We still don't have a range, a trend. We have a range. The scoreboard is greenish, but it's not a green trend day. I've already explained 3 times why 642.10 is a target. If you close Meta as $55 loss, okay to wait until tomorrow. It's okay to wait. Oh my gosh. Okay, I haven't noticed. Okay, so you know me and KRE. The KRE just broke out. Like broke out from Friday's highs. That alone makes me want to buy calls on the SPY. Do not be short big time. Like just in case that's a warning sign. The KRE, which is a leading indicator in my book, broke out from Friday's highs. What? Dang, that's some gangster moves right there. They still have a prior fail, but look how old it is. And the fact that they're above Friday's high. I don't think anything else is above Friday's high. Nothing, like across the board. Find me a thing that's above its Friday's highs. Meta yesterday flashed for a second at the open. Above Friday's highs. Aplovin is above Friday's highs. Well, that speaks to Aplovin is APP, right? Oh, yeah. But that one is recovering a massive disaster. Oh, it's recovered everything. This so a great P&L seemingly, and I would never invest in this company ever again because the investors have zero. They have no clue what they're doing as a collective. So they rally it 200% almost. They drop it 60%. They rally it 120. They drop it, and all with no news. Like the same P&L, the same conviction, the same growth rate, the same amazingness. It's a buy and hold from low, and up here it's just a crapshoot. I think the best way to do it is if you have the stomach for it and the account, sell puts whenever it becomes hated. Let's see if this harmonic brings us back down to 642.60. I can't believe I just saw that KRE. Wow. That's insane. Makes me want to start to look into the options of the KRE to see if there are any hints. Is the stream on Discord going well? Okay, that's good. This red W you see should target 642.6. Target 2 is 642.4. I'd be surprised if we get to 642.4 because that's just a hair lower than the baseline for this last burst. That would be surprising. Pleasant surprise. I don't have anything on the line short term for being bearish, but I do like to clarify overnight lows. We didn't even come close to that. It just leaves a Swiss cheese market. Speaking of which, let's go to the SPX to get some clarity. Go to 60, 30, 30. All right. So last week was all bearish until Friday. And this week we're drifting. So how are we doing versus forecast? Last week's forecast was this white box. We are right in the middle of last week's forecast from last Monday. This week's forecast is this white box. They're very close. So this says, even if we go to the worst case scenario of the expected move for this week or last week, we would still be inside the support from last week. Meanwhile, we're this close to an all-time high breakout that could take us to the upper ends of the forecast from this or last week. So bullish posture, buying dips and higher highs, that hasn't changed. You cannot change your opinion in this market. To hold a put with conviction, saying that we're going to break down without a real reason for like 2 or 3 days, you're causing yourself some grief because you're swimming upstream. It's different than saying I'm holding a put for the next 3 minutes or 5 minutes or an hour. Me seeing the KRE break out with this much conviction, I'm glad I said that I would be holding calls into NVIDIA's earnings in defense. Because I have bearish positions that I would want to defend in a super breakout, I would want to defend them preemptively. Renting insurance, totally okay. Let's say you have money on the line for 3 months out. What's wrong with buying a few calls against your trade? Or if you're long everything, what's wrong with buying a few puts? This KRE breakout changes my opinion on a lot of things. So far, it has not steered us wrong. The KRE has been a leading indicator. Am I doing anything with NVIDIA? Not today. What do I know? Okay, so we have had the chance now to tag the day's highs. The brown box is my opening range. As long as we're inside the opening range, that's one thing. If we break out of the brown box, orange box, on a closing basis, meaning like we spend half an hour breaking out from it and then we break out, we will have 80 cents of upside. That's the easy leg. So 644.1 and up to $1.40 of upside. So 644, 6 or 7 if we break out from the orange box. I'm giving you the upside potential if they take this breakout. Harbor Freight. 25% off. Because we miss you. New product alert. Concrete mixer. Don't need it. Thank you. Thank you for thinking of me, Harbor Freight. I didn't say buy calls in NVIDIA. You misheard. I said because of NVIDIA's earnings, I would buy calls to defend my positions. So if I'm short the NASDAQ or the S&P, I would buy calls in the NASDAQ or the S&P. I had a whole discussion about it earlier today. So that's when I said I would buy calls to defend myself against the NVIDIA onslaught. Remember what happened? Was it May? No. Whenever... Here, I'll show you. This one. July 30th, Meta, Microsoft reported. They both soared. They took the whole market with it. We have since priced that out and bounced off of it. So if that happens, my account will be severely hampered. So defense would be just to take a shorter term upside bet to say the bulls will have their way with the NVIDIA reaction, and I would ride the bull wave. Don't buy calls if you're not short the market. I don't know what's going to happen. How far out? 5-7 days. The shorter the better, but not too short. The shorter the better because you will feel the effect of the longs a lot faster than the effects of the shorts that are losing. So your longs will be working harder than your shorts for you than against you. Too short would be you're paying for implied volatility. Because we have an event, I'm pretty sure the options are going to be more expensive around that event. Don't forget, we have GDP data as well, and I believe some inflation data. So my take is every headline from that perspective, GDP and inflation should be positive. If the inflation data is bad, you can ignore it. Powell told you he's going to ignore it. I guess if the inflation data is horrendous, maybe they freak out a little bit, but then they rally back in relief that knowing, oh, he's going to cut more rates and maybe start a QE. If he's willing to ignore, to focus more on the economic conditions, so he would be willing to start a QE in spite of inflation, I think it would be devastating, but it's his decision. And if the news is good, they'll rally in relief, even though they don't need it. And as far as GDP, if the news is bad, they'll say, "Hey, rate cuts, more rate cuts." The worse the news, I think it'd still be a positive reaction. So I cannot conceive a scenario from the GDP or the inflation that would cause red ticks, consistent, persistent red ticks. I just cannot see it. What scenario is it? Maybe you can. I'll open it for debate. What do you think? Strong GDP, I think they'll be happy. Weak GDP, they wouldn't care because Powell will cut more rates. Both responses would be green or small greens or big greens. And same concept for the inflation. Bad inflation, who cares? He said he would cut regardless. Good inflation, hey, gravy. More rate cuts. So the headline favors the bulls like they need it. They don't. Everything favors the bulls. Pretty quiet bunch on Twitter. You guys are too nice. You should go see StockTwits. They're not nice. I used to post there all the time. Now I haven't posted in years. I go there once to check it out. I post once and then I get immediately reminded why I don't post there anymore. I should cancel my account. Are we serious? Cracker Barrel? What's the ticker symbol for Cracker Barrel? CRBL? No. There you go, CBRL. Is it worthy of a presidential tweet? What is StockTwits? It's like Twitter, only for stocks. It's junk. Don't go there. I'm not talking about it. There's a tweet from Trump about it. Make Cracker Barrel a winner again. Change the logo to the old logo. What is happening? It's a movie. Oh, go ahead. Okay. Entertainment. Speaking of, how's Intel doing today? Range bound. Okay. If you took it long based on my comments below 20 and it was a trade, I would have scalped it. If you took it long because of a turnaround story, that was my comment. Make it a long-term commitment. Stay in it. I don't know if there's enough premium to sell covered calls, but that would be it. Royston, did you post the entry of those calls? All right, high five. That's how it works. Nice work. That's not all he's doing, Maria. That is an unfair statement. You cannot accuse this White House from underdoing stuff. They've got their finger on every pulse there is everywhere in the world. They're on 24/7. That is a fact. Plus, you're not paying him. He's not taking the salary. So there you go. $643.10 is an opportunity, and there's a seller right above that, which happens to be the range for the day. Very dangerous for the bears to let that go. Let's look at Tradieticks. Tradieticks says anything is possible on the QQQ. On the SPY, nope, it says 642. So it, like me, sees the downside potential, but it hasn't played out. You know why? 643 is in the way. If the bulls take out 643, it's over for the bears. It's going to be very difficult to come back below it. And this better be a bear trap, bull trap. If not, like meaning they should reverse it down to 642.8. Otherwise, I'm going to monitor the price action and the options to see if that triangle up there has been completely taken out. All day, 64, 60, and 65 were the highest magnets in the SPX. So this is another day where Tradieticks, outside company, shares conflicting information about the S&P. The SPX is the S&P. That's the big daddy. That's the index. Everything tracks that index. Says higher. $20 higher. That's 2 SPY dollars higher. Okay? Nothing in the way. SPY says a full dollar lower. Who's right? Maybe both. Maybe we drop and pop, or we pop and drop. I don't know. Be careful. Be ready in both directions. I trade the range. I look left. This is a break point. I don't start longs. If I wanted to be long for the breakout, I would buy the next dip. That would be the cheapest way to get long. Some people don't care. They buy the long because they can take the pain. If you can see 20, 30, 40% drawdown on your calls, take a call and wait for the upside. It seems like everything favors the upside. It's not crazy to buy the call. There are some technical reasons to expect the downside. They've had their time. They've had their opportunity. The bulls took the support and proved it 4 times. 1, 2, 3, 4, 5. 5 times. And they made a higher high. So now a breakout from here, just the handle of the cup is almost $1. So that's the same target we've been talking about all day, 90 cents. So 644.1. That's just the handle of the cup. What's the cup? Whatever happened overnight. So you tell me, is it $1 extra that doesn't register here, or just an extra like 50 cents or more or so? The market is still not green, but it is very bullish posture. 2,000 stocks are up almost 1%, which is a conundrum. I'm going to go and take perspective one more time. We have the perception that it's green, it's not green. This is the perspective. That's the S&P. A lot of red. So it's not a green day. It's flat on the scoreboard, flattish green. There's a schmut ton of red. The reason we're not red a little bit, because we have 2 stocks that are big, that are propping us up. Not a big deal. Let's look at the small caps, which is the big deal today. It's up the most. It's up the most recently. I still say it. If you look at this visual, it doesn't scream we're up almost 1%. There's a lot of gray. Okay, there's some green creeping in, and there's a lot of gray. There's a lot of red. This area is solidly green. Oklo energy. So anyway, same perspective as this morning. And there's the breakout. That red slash was there from earlier. I forgot why we put it. If I was long calls, I would be out inside that red slash. I would be out here. If I was holding calls, I would be out. If I wanted to chase this rally because I think it's going much higher, I would buy the dip into 643.10 to go to 644.10. I would buy a call on the way down. I would not start calls here. The algo flow is red and diverging. Reasons to look down. The SPY, reasons to look down. The SPX, we still have $1.50 of upside in the SPY. There are things going on that don't make sense. So scalp the longs, manage your losses on the puts if you have them. Our losses here today on the puts are gravy. Like, we played the puts in the morning correctly, and if somebody bought a call in the morning, that's their out. They were red all morning, and that's their out. The puts played out 2 to 3 times. That last put did not work. The calls played out finally. The Iron Condor played out twice. Overall, the day is solid. And now we want to see if they want to make it a trend day. What does that mean? Do they want to chase $1.50 of upside from here? 644 sellers are still there, but tiny. So I'll shrink that a little bit. The pressure from the bottom is still 642. They haven't moved it up, but it's larger. So if we fall, all it says is that 642 should be solid pressure. Whatever this PNF chart is saying, I'm trying to pick level information from this. I'm just too new. Reading it, multiple failures, breakout in process, something like that. Maybe I can read that 642.3, 644 is a solid base, but we already knew that. I had the green rectangle. I have the yellow box. That yellow box has been here for a long time. You guys know it. Same with the orange box. So it's not telling me anything I don't know. So I know that they're trying to break out from my morning box. That is very bad for the Bears, sorry. If in the next 20 minutes we don't go back below this green line, we're probably going to rally 80 cents from here. So that's where that 644.10 came about. 80 or an extra 40 and 50 cents on top of that. So 80 to 1.3. I still won't start calls here. If you want that opportunity, buy the dip when it comes. It most likely will come often enough. More often than not, the dips will come. All right, soldiers in this fight, mega caps. Alphabet bounced and is recovering its morning dips. Nvidia breaking out, looking to break out. I don't know if they'll do it before the earnings. Microsoft still the laggard. Apple, great work. It recovered the morning dip and is breaking out. That pisses me off. I can't stand this company because it's leaving so much unfulfilled potential. Amazon should have a problem. Meta always has the potential, but it hasn't done much today. AVGO always has potential. Don't ever bet against it. But it should have a problem from the prior level. So the friskiest breakout in the making is NVIDIA, and it's large enough. I wouldn't bet money on it. I would buy the dip to get long for this if I was trading, or hang on to my put if I didn't stop out yet. If I have a put and I didn't stop out yet, I would hang on. I would use any dips to make my position better. If it's only one put, I would hang on to it. I really want to see what happens on the dips. 642, 50, and 10 are still targets from rising wedges. They're targets from the SPY gamma pressure. They're not targets from SPX gamma pressure. The algo flow is still very red, although getting better. Longer term, the KRE breakout says don't be short this week for no reason. Be hedged this week if you're short longer term. Which is what I said Sunday night. I sent out a video for you guys Sunday night. I said, that's my plan. I said it again Monday morning. I said it all day here yesterday as well. The buyer at 644 shrinking more. So the sellers, the pressure facing the rally is shrinking. The pressure at 642 is growing, and now it's expanding into 643. So I can move this up a little bit. So now we are breaking out from the morning range, and we're establishing the opportunity for a trend day to make higher highs and higher lows. So we're creating the opportunity to start doing this, to create a trend. That's what they're working on, okay? There should be a dip to clear this up. And if they do, I want to see what they do with my range. The bears have a very short period of time, like from here to here, to get us back into this area. Otherwise, we're going to drift higher. I'm describing the price action tick for tick with regards to all the levels we've been discussing for a few days, especially last night, yesterday afternoon, last night, and this morning. This was an amazing hold right here. These guys right here went above and beyond on the back of some unusual leaders today. So that is the XLV out of nowhere decided to be a hero today, bailed us out. XLF always bails us out. The industrials, look at this, went from loser to nice bounce. Well timed. Look at the materials. Boy, talk about a tag teaming bulls. They're not selling anything in aggregate. They sell A to buy B, they sell B to buy C. That behavior is there, and that's what makes the higher highs and higher lows price action corrects. There, we dropped to where I said we should drop at least halfway. Finish the job, sir. You got here, get the 643.10. Close all the candles you have. Well, it's not a big open candle, but it'll be nice. 42.90, 642.90 should be a floor. They should not go below it without intentions of finishing the more downside. So let's say they don't take out 643.45. This little scribbly here, I'm going to put it here. There should be a seller in that scribbly. If they don't take that seller out and they come back down to here, it's not the end of the world. This would be a nice place. A backup nice place would be here at that red marker. I didn't draw that red marker. It's a Fibonacci line that draws itself automatically. But it would be a place where I would look for confirmation of a support zone. Let's see what happens here. I'm going on mute for a second. I need some water. I've been talking nonstop, I feel. So you guys should talk a little bit. Selling calls on Palantir for 76 cents. Whoo. Oh, you missed it? I'm not so sure I would sell a call for 76 cents unless it's a covered call, in which case, go for it. Covered calls are fine. In fact, for me, it's a must. I wouldn't own a call. I mean, I wouldn't own shares without covered calls. So you see that gray W shape forming? If it turns red, when it turns red, like this smaller W here, it will say the potential is to dip. It would say nothing other than what we just said. So I said the bears need to bring us back down to that zone, and they did. But I guess I needed to tell them to keep us there. So I'm going to go back to this morning discrepancy between the VIX and the VIX futures. The VIX just covered the gap from overnight, and it's still much higher than yesterday. That suggests a weak market. Well, we have 2,000 stocks up 1% and a bunch more looking to break out. And then you look at the VIX futures that broke past yesterday's support. Clearly, those two things don't agree on what's going on today. The VIX futures behavior explains the market action results today. The VIX behavior does not. One of these two things has to change. Either the VIX flashes low down to like 14.3 today, out of nowhere, drops to 14.3 and we finish this rally, or the market will drop and get us 642, 642.20. One of these two needs to change. It's not Wednesday, right? Is it Wednesday? No. If it was Wednesday, I'd say, okay, this is a VIX expiration day and all of that jazz. We have something going on. One of these two things should happen. Let's see which one. It's really annoying to have only a matter of hours of redness and then much more red after hours, and then not even look back for a minute during the day. We had that happen for a while, I think, 2-3 weeks ago, where all the red happens at night when the pros are trading and all the greens during the day when the retail's chasing. I sure hope we're not back to that, because that's annoying AF. We have 30-second charts in front of us, and they look like they're on slow-mo. Did we look at the KRE chart on a higher time frame? I don't remember. Let's look at it. Did I zoom left? Okay, here's the exciting part for the bulls of the KRE. A breakout from 66. Okay, I may have said that this week. I'm just drawing a deja vu. Says we have $17 of upside. So if you break out from here on paper, you have an inverse head and shoulders that says we go to like 78, if not more. I challenge it. Yeah, I definitely said that. I would say it would be 75, 74. Not to mention that there's this mountain of failure above it. But if you're looking at this chart, time frame unknown, ticker unknown, inverse head and shoulders, which they broke out but not established. You need to come back and then come back up. I say it goes to 67 and then it fails. I will short it. I am slightly short. I haven't looked at it, but it was a starter position. I will short it if it spikes to that level. The KRE is regional banks. I don't know if there's one predominant ticker in there. Let's go check. Hopefully not. Hopefully it's just a bunch of tickers that each count a little bit. Okay, yes. It's a bunch of tickers that are each 2.5%. So something like Citizens Financial, Regions Financial, Zions, First Horizon, Truist, Webster, I've never heard of it, East West Bank, so they're all like 2.7 to 2%. That's great. Okay, RCL, be careful. The fans of RCL it's a meme stock. So yeah, you can short a stock that's going into a prior fail with an immediate stop. Having said that, this company survived the worst business case scenario of all time. Like, they were forced to shut down and accumulate debt. They survived. Short it with caution. I wouldn't short it for me because I don't want to lose to the bulls of that stock. So I would prefer not to play, but it is shortable as a chart. Make sure there's no earnings catalyst. Make sure there's no earnings catalyst from one of its sister companies, like any of the other, like Norwegian or Virgin. I don't know if Virgin's still in business. There's too much money in the world. The inflation is healthy because we have full employment in the US. Full employment means people are making money. And the US, we thrive on spending cash flow. Like we borrow to spend as long as we have cash flow. The minute the cash flow stops, the spending stops. So if I have a job and I'm making 12,000, 15,000 a month, I have a fairly low mortgage or not. I have a paid for car or a small car. I would spend everything I have. That's the typical mentality here. At least I'm judging by my friends and acquaintances. Like I go to my gym, which is a fighting gym. A lot of people are trying to make it. They're younger, they're aspiring fighters, so they have hourly jobs. They're making ends meet. Like they don't have a lot of money. And they go out every day. Some of them travel a lot. So they're spending what income they make. They're not saving. That works as long as the job market is healthy. I read a stat that is concerning. I don't remember the stat, but it suggests that hiring is weakening beyond any other level they've seen ever or in a long, long time. Like 50% of companies are no longer hiring or on hiring freeze or something like that. The statistic of number of companies that are not looking to hire or cut down hiring dramatically, something along the lines. You guys may look it up, but it suggests that maybe that's what Powell sees. Holy crap, the labor market is going to tighten severely. That would be a problem, and it would be probably bigger than inflation because consumer spending will fall off a cliff. If you think you're getting fired, you're going to stop spending before you even get fired. I'm guessing. Boy, if it wasn't for Microsoft, the S&P would be broken out. Last 7 days or so, Microsoft has led balloon. It did that before the correction too. Remember, I said the market should be doing what Microsoft is doing, and then the market followed lower. It's a great company, not outrageously valued. I mean, it's not cheap anymore. It was at 340. It's just drifting lower today. Maybe that's what the market should be doing, drifting lower today. I cannot believe that we covered the fair value gap with that long wick on Thinkorswim and we're not going there. I just can't believe it. That's very disappointing from a charts perspective. I don't have any money on the table for that trade, but that is annoying. That's an interesting wick right there. What is that all about? So this is a 30-second wick, and it looks like an inverted hammer. Let's see it close. It's the opposite of this one here. 30-second charts. $644 pressure is still about the same. It hasn't weakened any further. 642 pressure shrunk a little bit, but it's still there. So there's plenty of support if we fall. There's not plenty of resistance if we break out. So the trend has the ability to form itself. So now we look at these mega caps that have been so flexible today. Here's a 5-minute chart of them. Fell off a cliff, super strong bounce, gave up not much, less than half, went to the top and is failing. Let's see if they hold the middle. Red tick. I see a red tick. Red tick alert. Red tick alert. Okay, as far as levels, here's one that sticks out. I'll give you a second to find it. Short-term SPY level that would mean something. Let's see what they do with this. Blue, single line, fat. If they lose this one, that's a significant dip. And it brings us back solidly inside of our opening range. The bears may breathe a sigh of relief. They averted effort one at establishing an upside trend that would take us to 644.1. Let's see if it happens. Here, I'll give it a little bit of mojo. I'll put it that way. That's another interesting candle, the opposite of the other one. So a minute ago, I said that's an interesting candle pointing at this one. This one that just started here was interesting as well. It gapped down. So it opened at the very lows. Let's see what they do here. Maybe that's the new range, those two green arrows. I guess we're doing a drum roll right now. That's another interesting candle. You see how they're starting at the tail end of candles now? They flash and then they retrace. They gap up and they gap down. They're flexing muscle. They're about to do something. Gosh, in slow motion. Do it already. Just do it. Go to 644.10 or come down to 642.8. Let's do it already. This is where we anticipate a headline. Hey, what's in the news tomorrow? I know there's another. Is it mortgage information coming out? Not that it matters a lot, just so we'd be ready. Is there anything in the middle of the day, Tuesday? It is 9:40 our time. 2-year note in about 20 minutes. That's important. You know, the 10s to 2s, that's the part of the yield curve that CNBC advertises. Tomorrow, a bunch of mortgage information, some oil information. We don't care. Fed barking will be barking tomorrow. And a 5-year note, also important. Thursday, GDP and CPE, PCE. I thought we did PCE. This is a quarterly. What was the other one? Month? GDP, is that an update? Yes. The last one was green. They're expecting negative GDP. Interesting. Okay, that's weird. No. The last one was red. Okay. So this is bizarre. The last print on GDP was red. The forecast for this one, super green, 3% on growth rate, quarter over quarter, second estimate. 3? Corporate, that's the regular GDP. What? 3? So there's no way we're going to impress. We're going to be more than 3? That's weird. Am I reading this wrong? Can somebody verify this? Their expectations for tomorrow's GDP is 3 when the last print was minus 0.5? Look at this big green candle. Nice. Okay, so that answers these two arrows. Oh, great. TradingView is starting to do its thing again. That is not my computer. I rebooted. TradingView unstable. Cooking the books, but Gint, come on. From minus 0.5 to 3 in one report? I find that hard to believe that they can swing that. That's the ETFs, by the way, middle of the right-hand corner of my screen. Look at them breaking out. Good Lord. The XLF is higher than the high of the day, but still at a problem zone from yesterday. But if it's following the KRE hasn't had a red tick all day since the breakout. So if it's following the KRE, the XLF, we're headed to the moon. I just don't know what the hell's going on yet, what they plan on doing. I know what's going on. I don't know what they plan on doing. The 644 pressure hasn't changed. The 642 pressure is still there, and now we have pressure at 643. So the buyers are being, the pressure is following from below, but not very impressively. The next half hour is super important for the bears. I mean, their life depends on it right now. What they need is an NVIDIA dropping to 180.5, which is doable. That'll take the wind out of the sails. This rising wedge says this can happen. That's very loosely interpreted. I think this one goes up to here. Here. Loosely interpreted wolf wave, maybe slightly exaggerated. The wolf waves are rising wedges. I'm eyeballing this one, okay? That look like this. And they trigger when you overshoot. And then you trace out a meeting of 1 and 4. So NVIDIA has that potential, at least down to 180.4. Let's see if it does it. Wouldn't that be amazing that we can find a wolf wave like this eyeball? No, it's not that. I'm somebody double check the actual expected figure for tomorrow's GDP. I use a website, and they give me two figures. One is forecast, and one is estimate. I honestly don't know what the difference. I usually go with forecast. It's seems like to be the whisper number. But I don't know if a country this size can have a minus 0.5 GDP 1 month, and then the next month show up a 3%. Mathematically, the things that need to move that kind of growth rate for a country the size of the US, then I would reject both values. What's the one before it? 1.1. I use, yes, not the best. There's a number called consensus and a number called forecast. It seems that forecast is the more accurate ones. Yeah, no, Sam, that's what I have. Who's your source? Investing.com. Okay, so the number was 2.4 minus 0.2 minus 0.2 minus 0.93. I guess it's possible. How is that? I want to see the math on it. I bet you it's one of those situations that, oh yeah, we have seasonality and a full week fell into this month or that month or whatever. Okay, in the past, 3, 2.8, 2.8, 3.1. So okay, we're in the ballpark, 2.3, 2.3, 2.4. And then suddenly, in April, minus 0.3, minus 0.2, minus 0.5, 3. Wait, that is not the value I have. The last was 0.5. Anyway, I give up. We'll see what it is tomorrow. We'll talk about it tomorrow. All I know math, and this math doesn't math. There's no way a country this size fluctuates that much report to report. It's like that jobs report. We'll find out in hindsight. Oh, what happened was... All right, we're still looking at that blue line. Notice we did not make a higher high on this last effort, and we did have a pretty kick-ass candle, and we lost that other candle we had highlighted. Let's go do something. Okay, let's look at the options data. The 644 pressure grew a little bit in size, so they're not retreating. And the buying pressure is shrunk by quite a bit. 643 and 644. It's there, but it shrunk. And it's still bigger than the sellers up there, but it definitely shrunk. I'm wondering if NVIDIA is going to give me that green arrow. It's not going to be easy, but that would be a pretty good call today. In this environment, they will find something to buy. The appetite is there. Because remember TINA? There is no alternative. There is no alternative. Well, if you didn't invest, you got poor. If you don't own assets, you got poor because inflation made your salary mean less, a lot less. So let's say two people made $150,000 5, 6, 7, 8 years ago, and they got the same raises, so they're still making the same amount of money. If a person bought anything and the other person didn't, the person that bought, their net income, their net worth just leapfrogged the other person. Both the salaries got demolished by their buying power, but one person owned assets. There's Microsoft warning. The person that owned assets suddenly became much more valuable than the other person, financially speaking. So people that have cash, they're getting poorer. So they're saying, screw it, I'm buying stocks regardless of how high they are. FOMO kicked in. We have a term here. Raghu made it popular. JOMO, the joy of missing out. If you have the luxury, you should enjoy missing out at all-time highs so you don't get stuck loading up. It's okay to nibble, but it's not okay to load up. Yeah, Microsoft just beeped at me, and I did already tell you that it's the only one that's behaving like I would expect them to today, even if it's just to retrace the overnight lows. You see, both bounces off of the blue line like it's lava. The bears cannot let them make a higher high today. I know it's pennies, but when you give them a line like this to be concrete, you have already seeded the day. And we're not even green yet. So the day would be, the IWM would break out. Right now, the IWM is up 1% when the rest of the market is lagging. They cannot hold up 1% too long if the market doesn't follow. Okay. Well, the candle is exactly where we drew the line. Are you seeing this? I mean, it's not a coincidence. I drew the line because I knew it would be important. This blue line. I just drew it here in front of you all. It was prior resistance, big candle. This candle was phenomenal. This was a flash low and an immediate rejection. This was a huge attempt at that and failure. I call this either the mother of all bear traps, playing possum. No, wait, I can't do it. So I used to race cars, and I did this. If you're in a race, if you're racing, 3 laps left, you're in second place, the person in front of you is driving fast, but you know you're faster. You test pass a corner at the tail end of the lap, and you don't pass them until the last lap. so they don't have the advantage of being behind you with 1 lap to go. Same. So maybe the bulls is confident enough to say, I'll stop right here, bring more buyers of puts in, and then take off. We'll see. Or they're just exhausted. This here, if we drop below the blue line, we have a chance at holding our morning range, staying inside this orange box. That'll be great. Then it'd be push-pull all day. The iron condors would play. The puts would have lost a little bit of money. The calls would have made a little bit of money and lost a little bit of money. Depends on where you got in and out. So nobody lost a fortune. Nobody made a fortune, but everybody made a consistent trading day payout. Overall, you had a green result. I know for a fact that a couple of you were stuck in some bear call spreads and you got out nicely yesterday. I know for a fact that a few of you were stuck in some other trades that this week you're able to get out even green or slightly red. That's how professionals trade. They seek opportunity, and if it doesn't work, they have a way out. You live to trade another day. Thanks, Larry. I see your comments. Deaf ears, man. Deaf ears. So this green M has a potential that has been fulfilled already. 643.3 was target 1. 643.45 is target 2. And it has to stay above 643 for that green M to be alive. So is this one of my lines? Okay, so this line is still important. I'm going to take it out because it's a round number, 643. You can remember that. GDP in Germany is slightly negative for the second quarter 2025. Yet Germany's stock market is soaring to highs, right? At one point, they were doing better than us. I tried to short it. I couldn't find a good ETF. Find me a good ETF to short Germany's market. And don't tell me EWG or whatever the heck that ticker was. This number here, 642 keeps flashing. Oh, what is that? NVIDIA needs to hold its ground right here. Oh, by the way, risk appetite. I had a couple of stocks to watch, CAT and Palantir. They're tag teaming. They're showing me cracks both and showing me strength both. So I still lean on the fact that the VIX cannot hold 15. Therefore, nobody's fearing anything, and that alone is scary to me. Do it. Just lose the blue line. So we would have a day. Or take off. Get to 643.6. We're watching 30-second charts. Are we getting bored? All right, I think it's time to cut off Twitter machines. What do you think? So we're going to cut it off for YouTube and for Twitter. You're welcome. Thanks for being there. I appreciate it. Thanks for the support. Do subscribe. We do great work. So on chop day like this, we create income, passive income. We try to scalp here and there. We may still have a big banger at the end. We'll see. And on trend days, we crush it because we do have tools that other people don't. And we have people that contribute all day, every day, and they know what they're doing. Stay safe. This week could be epic. Last week was epic. The Fed changed directions in an emergency way. They didn't even wait to announce the meeting. He just blurted it out. And then I think they issued a statement saying, yeah, we're allowed to do this. So because my first question is like, why are you making policy? They immediately shut me up by saying, hey, we put it in writing. We can do this. There was a point in time where that would have freaked out Wall Street, because the question is, what did you just see that you didn't see 3 weeks ago? Because you guys met 3 weeks ago. You had all the reports you had 3 weeks ago, and now you're seeing something that's spooking the hell out of you. Maybe the meeting with Trump did it. Maybe they actually see data. If they see data, that should be scary. So stay safe, stay nimble, stay hedged. If you're long, hedge. How? Join the group, I'll tell you how. If you're short, hedge. How? I already told you. Just buy call. That's it. That's all you got to do. Buy call. Okay, later, bye. This is not advice. This is, of course, one person's opinion. And I encourage you to paper trade, so not to lose real money until you know what you're doing. Then take your own risks.